Hey everybody, Tim from Alpha Wolf Trading coming at you with another CEO interview. Actually, this is a company that I followed for probably a couple 3 years maybe. And this is actually the first time I've had the opportunity. Well, this isn't the first time. I met Brian last week and we had a very good conversation. And I think now is the time that I want to pay more attention to the stock. Actually, Brian, I do have a little position in the stock. I already went ahead and pulled the trigger on that. So I am officially a shareholder now. But Brian Cox from Surgepays, ticker symbol is SURG, traded on the NASDAQ. Brian, first off, thank you for coming in and agreeing to do the interview.
Hey, I appreciate the invite, and I guess it's good to know that now I'm working for you. So, so I can send you my request for time off and other things that I can ask. You can honestly tell me how I'm doing.
I don't know, man. I'm a slave driver. I don't know if you're going to get any time off.
Yeah. I wouldn't know what to do with a vacation anyways. I'd be miserable. So, no, it's good to be here, and I'm looking forward to our conversation, Tim.
No, I'm really looking forward to getting your story out. It's a very interesting story. You've got some potential catalysts that are on the horizon, right? But why don't you do me a favor real quick before we hop into the company? Give me a little history on your background, how you got here, not, just all your successes, but maybe some of your failures and what you learned from those to get to this point.
All right. So basically leading with failures is not going to be the canned consultant IR prepared normal spiel. So which I'm always, I like talking about some of the things that you hear all these guys and all they talk about are successes. And you think that sometimes success requires just magic potions or that people are just born with unicorns and it's not true. Those of us that have achieved some level of what people would consider success are simply people that kept fighting and getting up off the ground when they failed. So, I definitely did not start out 20 years ago to, be a technology entrepreneur that brought financial and prepaid services to the underbanked. It's actually quite the opposite. I wrapped up my football career at Murray State with majored in economics and spoke to my advisor on what kind of jobs are available for economic majors, which is probably something I should have done at the beginning of school. And it was teaching economics. And I was like, well, I'm not going to be a teacher. So got into sales, did really well for a couple of years. Was a product rep where I learned sales and I learned, being on the road and self-accountability and responsibility and, getting up at 2:30 in the morning so I could be north of Nashville. I live in Memphis to start my route. And got fired from that job when the company I worked for lost they lost a couple of contracts. And I swore I would never work for anybody again. Had no idea what I was going to get into. Started an LLC. And a long story short, this was at the age of when everyone was converting over to high-speed internet. And I was like, well, why don't I go in and I could be the company here around Bartlett in Memphis that runs Cat5 cabling as people are converting over to the old cable lock system. New things are happening. People are hooking up printers and everybody's networking. And so through that, I got introduced to companies that provided internet, DSL. And I was like, wait a minute, this reoccurring revenue model is awesome. I got to get into that. I know sales, I'm willing to work and build that base, but that reoccurring revenue model is great. Spent about 2 years being a reseller for other companies. And then fast forward, woke up one day, I was like, man, I want to be my own company. I want to be a CLEC. I want to be the provider. So I brought on a couple of consultants and went to the state of Tennessee and asked to be a CLEC. This was where, we could sell both dial tone and internet over Bell South through their network. Somehow, I have no idea how we got approved and went out there and tried to go at Bell South for that business customer. They stoned me, man. They killed me. Every time I'd light up a customer, they'd come right back and offer them $1,000 to come back. So it's kind of interesting play there. So obviously you can't compete with that being a small company that's trying to stay alive. So I got forced into finding, okay, Who does Bell South not want? And I'm sitting there, and I remember I could vividly remember it like it was yesterday. I had the wastebasket between my legs on the floor, and I was taking the envelopes from all of the bills that came in. And if it didn't have red on it, which means, you're about to get cut off, just throw it away. If it's not way past due, throw it away. Let's just pay the past due. Let's survive. And it dawned on me, there's a market out there that the word people didn't use a lot back then, prepaid, not banked, no credit market. The same type of people back then I was thinking that would go to a buy here, pay here car lot. I've got the ability to provide dial tone, whether it's a doctor or attorney or a low income person or a person that doesn't have a social security number, an immigrant. What if I did provided the same service at the same exact cost, the retail price to the customer, same exact price. Don't gouge them. They just pay up front. So that birthed, in our world, one of the innovators of prepaid back in 2005. This is a long time ago. What I learned from that, I tried every which way to get customers. It wouldn't work. I just couldn't get them. It wasn't the same advertising on Oprah, radio, news, newspaper, all those types of things. It didn't work. So what we did was we figured out that you had to reach the underbanked market in the neighborhood stores in the communities where they shop. There's a trust factor in the lower income neighborhoods in that underbanked market, and they trust that store. They protect that store. And that was ultimately the basic foundation to the whole thesis to our company, which is going into convenience stores, bodegas, community stores, and converting them into tech hubs for the underbanked neighborhoods. And, fast forward, about 2010, when I saw that you could text a picture on your flip phone to a buddy, I was like, well, our market is going to switch over from dial tone to wireless. So I sold all my home phone companies in 2009, 2010. I jumped into wireless, had a good run of about 6 or 7 years. All the while, I was building a rudimentary software platform that could do transactions at the convenience store. And we would open it up and add more modules where we can now do all of the third-party payments for even our competitors, Boost, TracFone, Metro PCS, do activations for these companies, do activations for debit cards and reloadable debit cards, anything that would be a life-enhancing product for the underbanked that you and I could just walk into a bank and get that our customers can't. How can we elevate those customers on a standpoint of, and not gouging them, not charging them more? They just pay up front. They just load it up front. So that's, if you wanted to get the real true backstory, I got my butt kicked by everybody across the board and kind of fell into, okay, well, let's keep trying this. Let's keep trying that. I went after a market that at the time was a market that Bell South and other people didn't want. There's more customer service involved. There's more hands-on approach. And it's very, very difficult because you've got to go in and pull all the doors of these convenience stores, build the relationship. I'm ACH in those stores, on a daily basis for payments they've taken. And it's very hard, but we built it, we did it, and then ultimately merged the wireless company and the fintech software company into an OTC company in 2017, and spent 4 years getting knocked around. You talk about learning life lessons, being an entrepreneur, making money in the real world, and then jumping into OTC, learning all the toxic death spiral and all the other convertible debt, all those phrases that had never even factored into my world. I thought I was a smart guy. I thought I knew business left and right. Man, I didn't know public business. So there was almost like 4 years in the minors learning how to hit the curveball. And, but all the while.
I want to focus on this for 1 second here, okay? Because I think it's really important especially with new companies. You and I talked before we hopped into the actual interview about how many innovative, really, there could be some game-changing companies out there in this small cap world. Unfortunately, they get, they think that these financing guys, the ones that are knocking on their door asking them if they want to raise equity or raise capital, they'd love to do a deal for them. They're not always your friends, right? And unfortunately, they wind up getting roped into those death spiral, high warrants, convertibles, and really winds up burying the company. It makes it almost so that the company's got no chance to be successful over the long run, right? And that's kind of what you just hinted on. You probably didn't recognize, at least initially, that these guys weren't always your friends, right?
Well, the biggest awakening that I had, you know what you know. Your life experiences build the book of knowledge and the way you approach today. Anybody that I ever gave money to, I'm your biggest fan. I'm wearing your jersey, man. I'm a fan of you. I'm rooting for you. The lack of emotion and the approach that financiers take to a company on the OTC, I was not familiar with that because I can't comprehend that. I'm a team guy. I'm an old offensive lineman. We talked about that. And so anybody that I'm involved with, I want them to do well. I hope for the best. I want to put out positive energy, hoping it rebounds back 2x. So that was a new world for me. Even learning about shorting and some of the other things that are part of the ecosystem. That's fine. I get it now. But yeah, that was tough, man. Learning that first couple of where you bebop onto a call and you're expecting to have a friendly call, and it's nothing personal. These guys are just very methodically ruthless, almost like surgeons. They want to save that life, maybe, but they're just going to keep going to the next company. That's their game. So that was the different part for me, was approaching calls without emotion and being able to discern the information and then ultimately ascertain, is this what's best for us? And then how do we hedge against anything happening? And that's ultimately, hey, Tim, to be honest with you, my goal was never to put 7 million of my own cash into the company. It wasn't. It was to do other things with that money, real estate and some other projects that I had. But ultimately, once I finally figured out what was available to OTC companies, I decided, to ultimately protect my position, I've got to be ultimately the financier for the company. And that was ultimately what I decided after getting knocked around a bit.
That, to me, that is so important. I mean, it's so important for especially new CEOs that are just not familiar. I mean, I just spoke with a CEO not long ago, and he came from the debt background. So he's from the finance world, but from the debt side of things. And then he, did an equity deal. And he told me straight out, he said, if I'd known, how ruthless, and that was the word he used, these guys are, I would have never done this deal. But he just, he, again, kind of like you, thinking, hey, these guys believe in us. They gave us, they got us the money and they want us to succeed. And in all actuality, they can give a shit whether you succeed or don't succeed. Right?
They really like me. They like me. They
do. and at some of these scoundrels will actually short the stock, right? In hopes that you don't succeed.
Yeah. You're 100% right. And, you talk about the education. The only way you got to jump in.
Hold on one second. I got to put you, I said this might happen. I think these are my guys. Hold on a second. I got to put this on pause. Hold on. All right. Guess what? I just saw this thing up in the corner. We were paused. I knew we were paused.
That's better than waiting till the very end.
Yeah, that would have sucked. So, all right, we're starting over again. This normally doesn't happen, Brian. Normally, this is a much smoother process, but
no, that's fine. Everything is relaxed, hair down. I'm about to take this off and put a T-shirt on, or put a T-shirt back on. It's draped on my chair. It's calling my name right now.
So where we left off when we were recording was the fact that the financing, you learned some hard lessons. You are in a much better place now, and I'm sorry to have you repeat this, but you're going to have to repeat this. So you personally have been financing the company instead of going to death spiral financing. You have been really putting in the dough to keep everything afloat, right?
Yeah, and I think that's telling for a couple of things and a couple of factors, and it goes into the decision-making process as CEO of the company. And also, let's say a year and a half ago, as I was making decisions on what to do, what not to do, how to expand, knowing that we were expanding and doing some product integrations that were not going to generate revenue quickly, but they were better off for the long term of the company. If I was able to use my own capital and loan that in at a below OTC market rate, very fair rate, no convertibility, nothing crazy, nothing offensive or toxic. If I had the capacity to do that, it made sense. Instead of showing up to NASDAQ as a one-trick pony, I wanted to be able to go in and be that comprehensive underbanked solution for across the board, not just a one-off product company. And I thought that we could make a bigger splash. And my hope was that when we got the funding from the raise to elevate to NASDAQ, that I would have everything built. The cars would be in a row, so to speak. We just needed gas, and it worked. It worked. Now, is there some luck involved? Yeah, of course, there's always luck involved in some level of business, even though you want to pride yourself that you're executing your plan, which we did, and that was the plan, but it did work. So if you look at the last couple of years, you're like, well, you guys lost money. Well, first of all, burning money and losing money on the books, which has all kind of accounting complexities, derivatives, and all kinds of oddities that don't really factor into the actual burn of the company. I knew I could support it for a period of time. And I was willing to go ahead and push off our uplist to NASDAQ until we had the entire fintech platform built, until our operations center down in El Salvador was fully built out, ready to scale, and until our prepaid wireless company was fully ready to go out and hit the market. So the timing did work really well for us. We were fortunate. It wasn't all perfectly planned. We were a little bit fortunate there, but that was why we made some of those decisions the last 2 years. If you look at and like, man, these guys were losing a ton of money. On the books we were, but that was being funded by the largest shareholder and the CEO. So if that money was all coming from convertible debt guys, I would have made some different decisions, because I would have really, there would have been a different path probably that we would have taken. But, we charted the path. It worked.
Okay. So let's talk about what it is actually that you get to do. So you've got a number up here. Let's see, 68 million, but that number's been updated to actually how many people are underbanked.
Yeah, the last 30 days, a lot of the major publications have come out and put that number closer to 100 million, which is really what I've been saying for a while, a third of the country. The wake of COVID, and then also the influx of immigrants who don't have access to traditional banking. So our market's larger than what the FDIC quoted in 2018. So, we knew that we're in the market, but now that that's become more of an acceptance, I think you're going to start seeing that number more when you see fintech feeds in companies or, on LinkedIn and these other, you're going to start seeing that 100 million number. But that is our target market, that 100 million customers out there that don't have access to traditional banking and normally either go without products or pay more for those products.
Okay. And your approach to this is going to the local convenience stores in these neighborhoods where the residents are really relying upon those stores for their everyday needs, right?
Yeah, we were able to parse out some really interesting government studies, and the studies were based on calories and the lack of nutrition for low income. But what we gleaned off those studies were that the underbanked or low income population depends on the corner store closest to their neighborhood, and they go there 5 to 6 times a week. And if you assume they're using cash, and that cash in their pocket is their security for the rest of the month, it does make sense that you would frequent the store as opposed to going and blowing your whole wad and then just hoping that there was, was it too much month, not enough check, the old commercial on TV. Right. It's true. That's the way it works. That the money in their pocket is for emergencies and security. So they do go, 5 to 6 times a week, and they do depend on that store. So we leverage that relationship with the store, which is 9 times out of 10 independently owned. And most of the time, the owner of the store is the clerk behind the counter. There's relationship, a really significant relationship based on trust between the underbanked and their neighborhood and the community store that services them. And so I want that guy behind the counter to be the one that's actually doing the transactions, that's taking your prepaid wireless payment, that's activating your gift card, that's reloading your debit card, that's selling you your Bitcoin, that's doing those types of things that there's a trust factor there. So we pay that store owner to be that quasi banker for the underbanked in these neighborhoods. That's the fintech platform side of our company.
Okay, so you're providing right there at their cash register, you're providing a terminal with your software on it.
Normally, especially nowadays, because money wiring and some of the other transactional businesses require a computer, the newer stores will have a computer at the register, and we do have a secure app. You can see it up there on the screen. The interface there, it's really a what you see is what you get menu-driven transaction platform. If they don't, or let's say you're in the real inner city or urban areas like in New York, where it's the little bodega and they've got the bulletproof glass cubbyhole and, rolling papers and 5-hour energy, it's all that I call it the Winnie the Pooh approach, his hole that he always got stuck in. If it's that, then we have reprogrammed the Verifone terminal that was traditionally used for credit card transactions, but it's menu driven. And you can do all of these transactions through that terminal to make sure that we don't ever pass on a store just because they don't have a computer at the register.
Gotcha. Okay, and so your solution is actually enabling them to it looks like sell Bitcoin, pay their phone bill, pay Netflix bill. All of this stuff.
Anything. The Netflix is really more of a gift card type situation.
Okay, gotcha.
I will say this and this is what's really exciting about the near future of our business in the underbanked. And we've been predicting this for a couple of years. Amazon reached out to us. We're traditionally to load value. And keep in mind, our customer base doesn't have credit cards. And, it's hard for us to visualize having a smartphone and all the apps don't do anything because there's no credit card behind it. You're not buying anything. You're not doing any social media camera. But Amazon stepped out, and instead of before, you would have to pay $4.95 to buy a reloadable debit card, and then you pay a fee to load the debit card, add the debit card to your Amazon account, repeat that process, or just go back and pay a fee to reload that the debit card to put on your Amazon app. Well, we integrated with Amazon about 6 months ago, where now you can walk in and a customer can simply give their telephone number to us, and it's the exact same transaction level as topping off your prepaid. Put on $40 and say, hey, I need to put $40 on my Amazon. Which telephone number, bud? Boom, type in the number, goes right to the app that's attached to that number. So we can load Amazon direct. Amazon has told us they're very interested in the underbanked market. They know that's the last frontier in America that they have not conquered yet. Right now, they're working through we've already started discussions on us being one of the folks that go out there and get Amazon lockers and put those in the back of convenience stores, because in their words, a truck dropping off boxes in low-income neighborhoods, the chances of those boxes staying there till the owners get home is not a very high probability. So by doing lockers, and if you'll look at Whole Foods next time, even for like the millennials that live in apartments or whatever, you'll see that that's what they've deployed in their Whole Food lobbies. They're trying to figure out the economics of putting those in convenience stores across the country, in these independently owned community stores. So we know Amazon's coming, and we're basically going to go out there and build the framework and add as many of these independently owned stores to our network as we can.
It's funny that you say that, because not far from me, there's I want to say it's either a Quick Mart or Circle K. I don't know, but they've got a whole row in front of the store of yellow Amazon lockers.
Yeah, they're testing these things out. Interestingly enough, I got a call, and I think the two ladies were from over in Europe. I got a call about 2 months ago, and we were talking about, because we beta tested this Amazon Cash product, and they asked us like, well, hey, what are you doing? Because whatever you guys are doing is a lot different. You're the only one out there that's getting results. What are you doing? And so, I kind of laughed. I chuckled a little bit. I'm like, well, you're relying on Silicon Valley type fintech companies to broadcast products out throughout the country like radio waves. That's not how it works. And I asked who they were using. I was like, well, you realize we're the only ones in the grassroots. We're in the store. They don't trust Amazon. They trust the guy behind the counter. You've got to use that guy to get to the market. And I said, hey, we'll keep doing it. We'll keep building this out, and you guys give us a holler in a couple of years and we'll see where we're at. But yeah, so we know that the big guys are coming for the market. The difference is we have feet on the street. We understand the relationship of how hard it is to get that entrepreneur running a convenience store to trust you and give you access to his checking account. But think about it. When you walk, our salespeople walk into a store and you're able to offer that person who's busting his tail 60 hours a week, look, I'm going to set you up with all of the ability to do all these transactions, and there's no inventory cost to you. I mean, that's a big deal. You take a $40 payment and you just made $4, give or take, let's say. I mean, you just, you made $4 with the risk of 40, which is big in the convenience store world. And you had zero upfront costs. So it's great for the
let me ask you a question. So on these gift cards and on the payments that they make through your system, what are you collecting? I mean, so if they're collecting $4, what are you collecting?
Man, it's like any other fintech product. It ranges all over the board. Now the gift cards are a little different. They're because you're trading value and you're loading value on a card. So that would fall definitely into the lower, let's say the 3 to 5% margin. That's probably one of the lowest margin products that we sell. The unique thing about the gift cards, look, and everything has to have a purpose, right? Walmart sells milk at cost or below 10 cents to get you to walk to the back of the store, right? Gift card is a Trojan horse for us. Independently owned convenience stores don't qualify to do gift card loads normally because of the anti-money laundering laws. They just don't. Now, that independently owned store wants to have all of the same products as the Circle K, 7-Elevens, Raceways, the big boys. So when our salespeople go out, that's actually an excerpt from our sales sheet. They put that down on the counter, what you're showing right there, the rack. And that's one of the things they say. So it's an ego play to, hey, I'd love to bring gift cards into your store. Your customers don't have to go to Circle K or Walgreens anymore. CVS, they can just get that from you. Well, the same platform that activates those gift cards, and obviously we put other products of ours on there too, reloadable debit cards. That same platform is our software platform. So we have that's why I call it our Trojan horse sales. Appeal to their ego, appeal to something they want. Most of the stores don't have gift cards, so we don't even have to displace another company. So it's a great way for us to get our foot in the door and then wedge it. And then that sales guy comes back. Oh, by the way, we also have other wireless products. Oh, by the way, hey, I've got this poster here creating awareness of people being able to load Amazon Cash. Oh, by the way. So I call it the oh, by the way, upsell. Wait, look, I tell you, and by the way, even to have that conversation, you walk in and you buy a bottle of water or an energy drink first, give something to them. Human nature is they'll give you're buying their time. So that's kind of my old school sales approach there. It's a great Trojan horse. Well, look, if you're running and gunning and I'm going to bring this capability into your store, and look, it's all GameStop, iTunes, like see Home Depot,
right.
Domino's. We can also ride the branding. I mean, my sales guys, when they come in, they put a sales sheet down. They've got Amazon, iTunes, the ability to load AT&T. They're dropping a couple of trillion in branding on the countertop, enabling that store to be able to help his customers. And keep in mind the mindset of a convenience store owner. I don't do money orders because there's zero money in it, but we have stores that have told me personally, Brian, I do money orders. I don't make a dime on it, but I just want to offer that service to my customers so they'll keep coming back. Well, we think about that. If that customer is paying his track phone payment every month, he's coming in there every month, and he's not going to just come in and pay that 30, 40, $50. He's going to grab a bag of chips, lottery ticket, coffee, whatever it is while he's there. Plus he's that much more familiar with that store. So it is a really good traffic driver, revenue driver. We do become a profit partner with the store once we've deployed our fintech platform in the store.
Okay, so let's talk about, so the next is the internet connectivity, right? So the affordable connectivity program, right? So anybody that's on this falls into this bracket is eligible for this affordable connectivity program, right?
Yeah, and let me give you a quick, because that's one of the first questions people always ask, well, how do you qualify? You qualify, essentially rule of thumb, any government program that you're already on, you qualify. One of the unique things about the ACP, which is Affordable Connectivity Program, it was birthed out of COVID and the emergency broadband benefit when they realized that so many kids didn't have internet access and couldn't connect with their teachers. When they saw the success of the program in the infrastructure bill at the end of last year, they converted the program to the ACP and made it permanent. So it's a permanent utility subsidy program. So it is here to stay. I think it's one of the better ones, obviously, because I also, we definitely need to have education and internet connectivity, in every home in the country, my personal belief. But when that became permanent, yes, we rolled this out. This has been a fantastic revenue driver for us. It's a very lucrative product line for us. And it does work hand in hand with our other, the fintech platform, while we do not do this inside the store. If you step back, I get that question a lot. We can't do it inside the store because that store clerk has not been, they're not connected to us. They haven't been background checked. They don't know the compliance issues involved. And also by definition, a convenience store that has to move people in and out at the cash register. It takes about 8 to 10 minutes to enroll a customer on the ACP program. You can't do that inside of a convenience store. So we use the parking lots. We'll have our people set up a pop-up tent in the parking lot of that corner store. Put the banners up on the side, let them know that it's free internet. They come, they enroll, then they go home and tell a friend, and it creates the line around the corner of that tent. So the programs do work together, but it's always good to differentiate that we do not do enrollments inside the store. That's outside where people can see in a traditional tailgating tent.
So you put up like a pop-up tent and have somebody in the, so
yeah.
So how many salespeople do you have? So just out of, so I know there's this. Okay, this is the one I want to look at. So right now, you got about half of the country. That's an awful lot of room for growth, by the way. So you got about half of the country, right? And you got basically a network of 8,000 independently owned. So these aren't 7-Elevens or Circle K's, or these are independently owned convenience stores, right? So that's a hell of a network that you have built. I imagine there's probably a lot more going this side of the country, right? Yeah. So why are we only limited to this side of the country at this particular point in time?
No, that's a good question. It's a loaded question though, so I'll answer it. The company was built because again, you got limited resources. The company was built, those 8,000 locations came from 1099 independent contract product reps. Just like the credit card business, ISOs, independent sales organizations, people going and pulling the door, getting them set up, training them, and then going down the road. And most times never coming back. One of the changes that I've made, or that we've made as a company over the past 4 months, and it was planned all along, I want in-house salespeople to be pulling the doors of these stores and work regions. I want them to come back every month and build a relationship and be able to upsell, take care of that store, not just be a product rep road warrior. So that's one thing. So I want to differentiate too, the different channel there. That is for building relationships with independently owned convenience stores. We're also, by the way, if I take care of that store, I can get whatever I want in that store. It's not controlled by a buyer at a 7-Eleven where they tell you facings and all the products and rules that you got to abide by. So, we can become a partner with that store owner. For the ACP program and for the mobile broadband, providing that and doing the activations that we talked about in the pop-up tent, that's a completely separate channel. That is, and those are different types of salespeople. Those guys go find a spot and they sit up for a week and they stay in that tent. So it's a different caliber. It's more of an enrollment person, similar to the guys that go out and do open enrollment for insurance, the government sponsored insurance. It's very similar to that. So those are salespeople, but they're really more enrollment specialists. We have about 400 of those right now that are working in those 14 states that you saw earlier in that slide. That number is fixing to significantly expand in the next couple of weeks as we add another 30 states. So there's fixing to be a couple of catalysts there that really start punching our.
All right, so hold on a second. That's probably something I should focus on. So add another 30 states. So how does that happen? So
Yeah.
help me out here, Brian.
Well, you're asking a loaded question for me there, Tim. I know that it's going to happen, and the best way for those to happen are through strategic acquisitions. And so that's I do expect to have 30 more states here in the next couple of weeks. We've been working with a company for about 4 or 5 months on integrating our platforms and making sure that everything would be seamless. We expect to have that knocked out in a couple of weeks. So that is something we've been working pretty aggressively on. And that'll get us, I think, 42, 43 states. The rest of the states will simply apply. It may take a couple of months, but we're going to have all the key states that I would want to be in. So
do you have to have a license to do what you're doing? I mean, so you're agnostic as to the phone carrier, right? I mean, it doesn't, because I saw it somewhere on here. T-Mobile, Verizon. So you're agnostic to whoever the phone carrier is or service provider is, right?
Well, let's keep in mind now, it depends on which channel we're talking. On the fintech side of things, we're taking payments for all prepaid wireless companies, every one of them out there.
Okay.
No matter who they are. Now, if we're activating a customer that's our wireless customer that we're providing the mobile broadband to, that is our customer. We're an MVNO. We are a prepaid wireless company, and we do have contracts with carriers, AT&T and T-Mobile. The customer doesn't see AT&T and T-Mobile; they see Surge Phone. So that's the wholesale commodity side where we're buying millions of dollars worth of data, voice and text, and we're parsing those out and strategically building plans and metering things in our software. So I do want to differentiate, between the two. And it is why it's unique. Over here, we have the B2C channel where we're direct to the customer providing internet connectivity in their home. Over here, we have the convenience store channel. And I would never want to limit it to just taking payments for our products. That's why we take payments for our competitors' products too. So that customer can depend on that store to make any payment that he needs to make.
Okay. Gotcha. That is going through. So help me. So you guys are you doing phones, or are you just doing the pads?
Right now we're doing tablets just like this.
Okay.
Tablets, giving them something better to communicate with, especially for homework and things like that. Good hotspot built in. Later this year, we'll phase in telephones. Right now, look, we get a reimbursement for this. We don't get a reimbursement for smartphones. So just from a economic strategy, market penetration, it only makes sense to, this thing cost me $83 and I get $100 reimbursement for it.
Hold on one second. Hello? 8249 Nelson Ridge Lane. Okay. Bye. Okay, sorry about that.
Fine. I'll go back to it. Now, the tablets, they cost us about $83. We buy them by the tens of thousands, and we get reimbursed $100. I get no reimbursement for a smartphone, so it only makes sense from a market growth and penetration.
So why is that? Why do you get a reimbursement for that?
That's a part of the ACP program.
Okay.
You get $100 reimbursement for providing a tablet.
Okay.
One per household per year, but we can provide the tablet up front, and then we get a $30 payment each month for providing internet connectivity to that customer.
To the tablet.
Through the tablet, yes.
Okay.
Which can also be used as a hotspot. So, it's a pretty cool connectivity device for the consumer.
Got it. Okay. So your market is growing just because of market conditions. For example, you mentioned COVID and immigrants that are coming here, right? So the market is growing as the economy. If the economy is not doing that well, I would imagine, and if inflation continues to go through the roof, that's going to, create even more of a divide, right? And that actually, I mean, and not to be you know, I'm not trying to be a negative person, but it's a positive, it would be a positive thing for your business, right?
Yeah. And by the way, don't get me wrong. I don't wish ill will on people. So, I mean, I don't benefit. I mean, I'm not a drug for sick people and I want more sick people. That's definitely not the case. I mean, my whole career has been based on providing life enhancing products, trying to make people's lives better. So, and just at the same price that you and I would pay. So it's definitely not that situation. There's again, 100 million people out there that are already in our market. What's unique about the market, as I've seen the past 20 years, I mean, obviously we've lived some crazy economic times, ups, downs, sideways, everything you can imagine. Our market keeps plugging along. It really is below that watermark of things that are affected by recession, inflation. It just keeps humming along. It is what it is, because as inflation goes up, I mean, if your food is paid for, whether bread's $5 or $2, your bread's paid for. So it's I mean, I know that's a metaphor, but it's true. So, you're going to sustain life and you're going to need our products. And I see, a lot of people ask me as it relates to the company, aside from being a strategic trader, people buying our stock. I mean, you're buying into a company that's almost de-risked, that's going to keep growing. I mean, even look at our mobile broadband numbers. I think we're around 75,000 customers today. And we just talked about there's a potential 100 million in the country. I mean, Florida alone, the Miami Herald just put out an article 3 weeks ago that said there's over 6 million potential ACP customers in Florida alone. And one of the things that make this new program unique is they added WIC, the WICC program, which is for immigrant children, to make sure that no one's malnourished or underfed, or diapers. And at the grocery store, you'll see a caged off area a lot of times with those product, detergent, formula, diapers. That's what that is. That's the WIC program. That's never been a part of a subsidized program before until the ACP for communications. So it was a big deal. That added all of the immigrants who may not be citizens or may not have a formal US ID. Now they're eligible for this subsidy, which, to be completely blunt, it does make sense. I mean, we could get into political arguments, but at the end of the day, if people are living down the street from us, we don't want them to be super poor. I mean, we don't want to be a third world country. We want everyone to rise with the tide. And it's a good way to make sure that folks in telehealth now for Medicaid or government sponsored insurance is a big deal. And they're doing that through their broadband connectivity.
So let's talk about, you've also got this wholesale product shipped directly program that's built into your software, right?
Yep.
And that is for not so much for stores that are in, cities and real populated areas, but for some of the urban areas, the outliers where they don't have, deliveries coming every 2 days. That is a benefit to another benefit for the independent convenience store owner.
Yeah. And that's an interesting product that I think we're going to see a lot of traction on later this year. And I'll give you kind of the two catalysts and reasoning behind that. A lot of development went into that. Let's call it a wholesale back office of the fintech platform. And that came from the field, from store owners who, let's say, Broken Arrow, Oklahoma, or Pine Bluff, Arkansas, guys that are not on the normal route, as you say, and don't have that 18-wheeler rolling through town and have all kinds of options for products. And what people don't realize is the convenience store distribution world for consumable goods, it really is a food chain. If I'm in the rural area, I may be 3 people away from the actual manufacturer, and there's been a lot of meat taken off the bone. And I may have a big minimum I have to pay just to get the truck to show up, or I don't even have access to certain products. And this actually came about, remember when CBD first hit the market was when the whole idea came to us, because stores were saying, hey, can you get me some CBD products? And at the time, CBD was only sold by a couple of people because the farm bill was new. There was moral debate, all that. So that's actually when we started developing this. And then it kind of grew a life of its own. Now, I will say this, it is a fully functional, really cool back office. I mean, it sends orders for fulfillment directly to manufacturers or distributors. It tracks the whole thing, shipping all the way to the store. The one thing I did find out in doing this which was also the reason for bringing in-house salespeople on board. A product rep sells what he knows. He goes down, he does the prepaid wireless thing, he puts stickers on the door and goes to the next store. To sell products, you need to call on that store once a month. You need to have a relationship with that store. And so that's where I expect, as our new in-house hired salespeople this year start building these relationships, I'm really looking forward to seeing the numbers and seeing how we can incentivize our salespeople to upsell wholesale consumable products direct to the store, because they can buy them from us cheaper. Example, there's a lot of like Kratom. If you don't have it in your state, you probably don't even know what that is, but it's a big deal. It's a little energy shots, peace of mind. Kratom, you know, Kratom, I think. But those are huge products in the states where it's legal. You know, a lot of people are looking to carry. It's kind of the new CBD, if you will, on the hotness of the product. We're able to get that product to stores for probably 15% less than what they're buying from distributors. Again, I don't have to make a bunch of money on every product that's sold because we're already doing so much for that store.
No, that's awesome, right? I mean, it's giving them, I mean, you really are building a partnership with these store owners, right? I mean, you're becoming an invaluable piece to their business, their success, right? How do they stay afloat against the 7-Elevens and the you know, Quick Marts or whatever, right? I mean, that's got to be a tough go. So that's helping them
too. It's time. Hey, you're running that store, you're working 10 to 12 hours a day. Are you going to go out and wait for the guy to come and pull your door, or you want to go in the back office and buy the products you need as needed? Keep in mind too, these don't have big storerooms. They don't have warehouses. So they're buying products as needed. Well, we can ship them to them as ordered. We don't have to ship you a pallet and justify the truck running, because we're using, just like Amazon. I mean, heck, I looked up the other day and saw a squirrel, you know, Sunday afternoon, squirrels in one of my bird feeders. You know, I don't have time to go to Lowe's. So I just jumped on Amazon and ordered a squirrel trap. It took me 2 minutes. Well, it's that same philosophy. It's time and efficiency, right? Because time is the ultimate commodity, right?
Right.
So and again, yes, I use the phrase profit partner all the time, because if I can help that store make more money, he's never going to leave me. And something to think about on that note, our competitors on the fintech side of things, you know, there are companies out there that do wireless top-ups. There are companies out there that do reloadable debit cards. There are, you know, the one-off products.
And there's ACP guys too, right? They're just focused on that.
Yeah, but nobody really goes out there and looks how to make, they're looking at numbers. Of course I drive numbers. Of course I do. But looking at things from a clever way to like, how do I keep them though? How do I, you know, the old rule of keeping a customer is a heck of a lot better than adding a customer, of course, but we can do both if we're intelligent and you mix these products together. For example, hey, if you're an ACP customer and, you know, we incentivize you for referrals, hey, I'll give you $5 in Amazon cash. I can text you. You click that text, it pops up in your Amazon app and gives you $5 in your Amazon app. No other ACP company has the ability to do that. We do, because we're integrated with Amazon, because we've got a fintech side of our platform that gives us a competitive advantage over the other guys.
It's taking you a while to build this whole thing out, hasn't it, Brian?
It took me, well, you got 20, and you see what I try to explain, and only the people that work with me or for me know, it's not just 20 years, man. I'm pretty relentless. I am a maniac. You know, I don't plan on working until I'm 80, but I'm getting my 80 years worth of work in. It's just compacted. Look, 10 years from now, there won't be this same opportunity. 10 years from now, there'll be a Nielsen for the underbanked. They'll be in the digital economy. You know, there is a big window here of right now. It's still the Wild West. So
right.
It is a hustle land rush for us. I mean, on both sides. How many, you know, before I merged my company into the OTC company, I was on the phone with the chairman at PayPal, who's over their acquisitions. And I asked him, what do you look for? And he talked, there's two basic value drivers they look for. And the one that stuck with me was that, you know, we look for companies that have a network of folks that we can deploy our entire platform of products on and create more value for our company. I was like, you know what? All of the big guys, the Amazons, the Walmarts, that's exactly what they're going to do in the next 10 years. I watched them do it with Whole Foods, and they did it for the data. And keep in mind too, our platform of all these transactions is based on blockchain. And we did that for security and continuity, but also for the data. We're siloing troves of data. on the underbanked. And there is no, again, there's no.
There is no, right.
Yeah.
There isn't anything.
So, and now, I'm not the guy who's going to sit here and say, yeah, Tim, we figured out how to monetize that now. No, but we will be able to, once we get enough. That 8,000 stores gets to 50, that 75,000 mobile broadband subscribers gets to 1 million. Yeah, of course, we've got some unbelievable touch points with this market to give us all kinds of data that does have a significant value to people who know how to monetize the data.
It's very interesting. Very interesting. All right. So let's talk about, so you actually, I want to take this over to the technicals for a second here.
Sure.
And talk a little bit about the charts, right? So, I was never a technical guy. I was actually a fundamental guy that didn't believe in technicals and thought technicals were voodoo. And then I went and took a technical course, and now the very first thing I look at is the chart before I even consider looking into the fundamentals, right?
You took the fun out of fundamental, huh?
Yeah, I did, pretty much. And look, from a technical standpoint, the technical guys are going to look at a chart like this, and not to say that you haven't had some nice runs over the years, you have, but it's still been a downward trend, right? Now, what's interesting and really interesting to me, specifically now, and this was the reason why I wanted to meet with you last week, was the fact that almost every micro cap, small cap company has been getting pounded for the last 10 months, right? It has nothing to do with the companies in many cases. It's just the sector itself is out of favor. And what's interesting about your chart is, even with this Ukraine shit that's happening and the amount of fear and anxiety that there is in the marketplace, because there's a tremendous amount of uncertainty, your stock has not been going straight down. It's actually been stair-stepping up. That's these little formations that you see here, where you're actually stair-stepping up. And that is significantly different from 90% of the other small cap, micro cap stocks that are out there, right? So you're showing signs of strength in a very tough market, and you're coming up to, so this is a gap that you have that happened when you did the reverse split. And I imagine that was to do the uplisting to the NASDAQ. Is that correct?
Correct.
Okay. So you created this gap. Well, gaps tend to fill. That's a technical thing. And you're actually at this, if you can see right here, you're actually starting to coil at this resistance area, which is the beginning of the gap. And if things continue to coil, that's just going to build up what you call it. That's like building a base, building up some energy. And then once you break that, you're likely going to go fill this gap. Now, you also have the 200-day moving average. So these are all things technical guys are going to look at and chomp on. If you break above the 200-day and you close above the 200-day, that's a very positive thing. So you've got these positive elements to your chart. And then when I speak with you and you say to me, well, gee, Tim, this whole other side of the country may open up for us in the next 30 to 45 days. Well, shit, that's kind of like a catalyst, right? And it aligns well with what the chart is saying. So that's why this is a very, I think, interesting time for the company. And if these things come to fruition that you're talking about, could be a very significant catalyst for the stock. How many shares do you have fully diluted outstanding?
Outstanding right now, I believe 12.1 and under
12.1 million shares.
Yeah, 12.1.
So that leaves you how many shares in the float?
Oh man,
I'll look at.
It's 5 million or so.
5 million shares in the float. So, a lot of people do not like reverse splits. I happen to like them because it does reduce the amount of shares outstanding, and it does oftentimes create very small floats. And then when you get a significant news event or fundamental catalyst, when you have a 5 million share float, you can have some pretty amazing moves in the stock price in a very short period of time, right? And what's interesting is because this has got such a long history of being in a downtrend, a lot of the technical guys, as soon as it gets a big pop, the ones that don't know any better are going to try and short it early on the front side of the move. And they're going to get spanked badly because they're going to anticipate that this is going to be a pop and flop event. And they're figuring, hey, just short it because it goes down every time it goes up, right? And that's where it does do that until the one time it doesn't. And that's when people get caught in the short squeeze. And it's a very painful experience, right? So that, I think, is a very feasible outcome, right? So how are you sitting? Where are you sitting on cash? How are you on cash right now? How's your cash burn?
Well, I mean, from the burn perspective, we're not burning cash anymore. So we're deploying the revenues and profits that we're making back into buying more devices to grow as fast as we can while working on, look, right now it's March 15th. We've got a 5.5 million receivable from the US government, and that goes up every month. They'll pay us at the end of the month, and it should go up to about 6 or so. And then next month it'll go up. So it's a very bankable receivable. So we're working like dogs because, again, I'm not selling stock or doing anything that has a convertible smell to it. I'm not doing it where we are right now. It just doesn't make sense. And we're bankable. We have about $4.5 to $5 million of paid for inventory out in the field with a, like I said, a 5.5 million receivable that's going to hit in 2 weeks from the government. So, that is what Tony, our CFO, is aggressively working on, is financing that would be just straight debt structured, factoring receivables, whatever hybrid that we want to do that has nothing to do with the stock of the company. So we do feel like, and I think what's going to happen, Tim, and this is my gut feel, assuming the world doesn't cave in, when folks are able to look at our Qs from the first quarter and go, holy cow, these guys were burning $500,000 a month last year. Not only are they not burning money, dang, they're making money in this crazy market. And then they're making money at an exponential hyperbolic curve, and they're not raising capital. And the CEO is looking out for shareholders because he is one, he's the largest one. And I think once they get to put like, okay, Brian's this crazy maniac who's going to grow the heck out of this company. And he loves working. He's a team guy, offensive lineman guy. He's out there fighting on the front lines, and he'll do whatever it takes. Because I am the flag bearer right now. I know that. The only thing out there for our company is the first 3 Qs of last year. That's it. And even when we file our audit from last year, your K, you're going to just see that was basically the pre-NASDAQ burn development integration phase of our company. Once you're able to see those Qs, and once people put this like, hey, wait a minute, you're at over 75,000 broadband customers in 14 states, and you just added 30 more states. Hey, you're making $18 a customer per month, and that's reoccurring, and that's coming in from the government. And people, the light bulb on their own clicks, and then they're also able to look at the Q and back it up. I think that's when you're going to see something pretty interesting. You used an interesting phrase that I use, coil. I believe you're right. And obviously that's what we hope for. We're going to control what we can control. But, and I think we'll be most likely, after some of these events happen, which were not information that we had earlier when we gave the guidance on 130 million for this year. I do expect to revisit that probably in about 60 days once we've got a little bit more data that we can, examine and give probably give a little upward guidance on that. And look, that's 130 million with, if you really want to get technical, and I don't know half of what you know on the technical side, but if we're looking at 130 million this year, 20 million positive EBITDA, and traditionally telecom and technology is 14x, and then you look where we're trading now. I mean, you could pretty much go across the board and pick your fundamentals that you want to value a company off of. And again, I'm not going to cry about it. We're just going to keep fighting and pound through it. And I expect things to the law of averages will kick in. And once people see what we've done and they match up what I said we were going to do with what we've done, I think that's when we're really going to see the true value, of what our company can do and what our company's doing in the market as well.
So listen, here's the deal. The way I view it is, and this is why I like to talk about failures and stumbling, and no one ever said it was going to be an easy path to success, right? I mean, it's just, it's tough. And where do we learn our best lessons? I think it's from the mistakes we make, right? And that's what makes us stronger. That's what makes us smarter. And you've been on a path for a while where you were struggling, you were learning, right? Learning about the markets, learning about the challenges that are out there. And now I think you're in this, I don't want to say a comfortable place. I want to say you're in a better place. How about that? Right.
Comfortable. You just brought up a thought. I used to put small wooden stools with no backs on them for my sales guys, so they didn't get comfortable. I wanted people out. You can't sell from your chair, So no, comfortable. There's a difference, and it's not comfort, but you can still be at war and have peace in your mind and think with clarity. If you're not thinking with the stress, because we can only think so much and use certain parts of your brain. And if you have the stress of payroll coming up next week, the what ifs, man, we're waiting for FINRA to get back with us, the SEC. Oh, how many comments are they going to give on this S1? Are the attorneys getting this done? That's a year and a half. That's been consuming all of the leaders of our company. And so you're trying to run a company and execute with what's left, because the goal is to get to NASDAQ. Now we have, when you're not burning money, you're not like, oh my God, hey Tony, how much longer do we have before we got to raise capital? What are we going to do? Who are we going to cut? It's not that at all. It's like, okay, strategically speaking, what do we have? What do we have incoming? How many more salespeople we're adding? What does our floating inventory in the field look like? How do we manage this? Okay, what type of—
You're focusing on the business.
Oh, it's growing the business, man. It's expanding. It's managing cash flow, not injecting cash. And if you've never been in that situation, it's the difference in excitement and energy that's almost like a drug compared to a stomachache.
Right. That makes 100% sense to me, right? I mean, when you're sitting having to think about how are you going to make payroll, how are you going to do this, how are you going to do that, that's consuming all your time. It's consuming all your creative energy is being used to, figure out how you're going to stay afloat, right? Where it's a whole different feeling when your brain is like, okay, how can we use this to better ourselves, right? How can we use this to increase market share? How can we use this to, right? So it's just a whole different thing, right? It's all focused on positive instead of sitting there stressing out and figuring out how are we just going to get it through this and stay afloat. That's a whole different thing.
In your chart, I can almost see, it was about a year. We started our first application with NASDAQ about a year and a half ago, and our attorneys warned us emphatically, do no IR, do no promotion, just don't even chance it. You're under the microscope. Don't do anything, don't do anything, don't do anything. Well, if you're on the OTC, there's limited people that can buy OTC stock, and they've got to be enamored every day or they sell. It's just the nature of the beast. So for a year and a half before we got to NASDAQ, we did no IR whatsoever, no ads, no nothing. I mean, we did nothing because we were scared to death we were going to offend the bouncers at NASDAQ. We wanted to get in the door. So you had that into account. And then you had the fact that all of the leaders of our company, if anyone that's ever gone through that IPO experience, or especially uplist experience, can vouch for the toll that it takes on you. Of, you're trying to run a business, but at the same time, you have a 150-page business plan that's being critiqued by, FINRA, SEC, and NASDAQ. And everybody's wanting, and sometimes there's overlapping things that kind of don't even really make sense on a street smart thought. So you're having to bring in consultants to help you, and it's up to that guy. And there's so much anxious and anxiety that it's really hard. I mean, between being on the OTC, not doing any advertising, and then also our business the last year was getting to NASDAQ. It just was. I mean, it was 8 hours a day. And then what little time that 5-6 hours at night was trying to catch back up. So, I think that's something that's important to say as well. We weren't in the business of making money the past year and a half. We were in the business of surviving and getting in the door at NASDAQ. Now we're in the business of making money. So, and this is what I'm much more adept to. And so I do think that people are going to see this year the real Surgepays, the real Brian Cox, the real team that I've assembled who specializes in scaling companies, not holding them together with their fingers in the dam.
I love it, man. I love the story. Just a couple of more questions for me. So what's the churn on the customers that you sign up for the tablets, and then B, your salespeople? I mean, I'm thinking about the size of your sales force, and that's a pretty significant size sales force. I mean, what kind of churn do you have there?
Yeah, the churn on mobile broadband subscribers in our industry is between 8 and 15. So we're running between 6 and 8 because, again, we incentivize our customers. I have other products that I incentivize them with. We have customer win back, customer retention, revenue. We have all those programs already built that I did in the past, and we have access to other products to entice customers. So really excited about that. And as an industry, I think we're either 1 or 2 in the country in customer retention. So
okay.
that's something our team does really, really well. On the sales guys, now, again, this would be on the mobile broadband side, the folks that set up the tents and move around, or transient vendors, I think some states call them. We've got 400 of them. I'm not going to say they come and go, but they stick with us because, look, when the guy at the top of your company is sales-minded, it makes a huge difference. Salespeople flock to our company because the people I surrounded myself with are sales-minded. Nobody, a lot of companies poo-poo on the sales guy. I don't. I look at the sales guys being at the front line of our army of expansion and moving out. So, we do little things like paying them weekly. A lot of these guys, even though they're doing really, really well right now, paying them weekly makes a big difference. I do little things we can do that maybe our competitors don't do. So not a lot of turnover because we also demand exclusivity. And if you leave, and try to go somewhere else, you're not selling in any state that you were just selling in for 90 days. So that by rule. Now I'm one of those guys, man. I'll have people's back, and I'm as loyal as they come. And I don't just say that. I really am. Again, you heard my story. I'm an offensive lineman, man. I'll knock the guy down. You just run the ball, okay? But you got to reciprocate. You're not bouncing back and forth between companies. You're not playing me against somebody else. You need to be on our team and fighting with us, and we'll take care of you. So we don't have a lot of attrition in the field for our salespeople either, because that means they would have to go to another state, or it just doesn't make sense. So we kind of put those in place to encourage good behavior. How about that? Encourage good behavior.
I like that. So, look, Brian, you said it earlier. I mean, you're at a very interesting time, right? So really now all it comes down to is execution, right? Doing what you said you're going to do. So, I think anybody that, is just now hearing about the story, listen, I'm not telling anybody to buy the stock. I'm not a financial advisor. I just tell people what I see, what I believe, and, it's up to you to do your own due diligence and figure things out for yourself. But I would say by the price action of the stock over the last, since the beginning of the year, the fact that there is a technical setup that is pretty bullish, the fact that you have some catalysts that sound like they're on the horizon and sound to be like they could be fundamentally significant. I think this is a stock you want to put on your radar and start paying some close attention to, if not taking a starter position right here at this level. I mean, this is a very interesting spot to start maybe dipping the toe. So that's my piece on that, right? Everybody's going to make their own choice, but I think it's a story. In a way, to me, this is a feel-good story. I know it's a bad subject, or I guess you feel for the people, but the fact that they can be connected to the internet and have a tablet, I think is important, right? because hopefully it helps them to get out of the situation that they're currently in, right? And I like the fact that you're helping the small business guy, right? The single independent operator. I'm a Cleveland Browns fan. You want to talk football? I've been a Browns fan my entire life, man. I'm from Cleveland, and so far that has not worked out well for me. But I am always the guy that roots for the underdog, right? So that is important to me, and I think, you know, helping those small business, those independent guys out is huge, and that's why I think you're going to continue to have that retention. I think you're going to continue to have that network that who knows where that leads to down the road, right? I mean, maybe there's things that we can't even comprehend today that are going to be available tomorrow. I mean, who knows, right? But you come across, I mean, you're a fighter. It's clear to me that you're a fighter because you've been fighting for a lot of years, and now it's, you know, hopefully it's your time to shine and your time to win, right?
I'm looking forward to the next 2 to 3 years. And I think, again, I obviously can't tell people to buy stock either. The way I would approach it, because I've been, you know, on the other side, I've invested a lot, well, been very blessed over my lifetime. What I would look at is, where are we now? What's the market? And where do we think the company will be in 2 years? I don't know stock trading. I mean, I can't do what you do with charts. I look at it as more buying into a business. And then also me knowing I am going to be out there fighting 18 hours a day, and I'm not willing to do something tomorrow just because another guy did it that way or because we did it that way yesterday. I always want to try new things. I am an abstract thinker. I want to try to do things better because I want to be the best. I do. I'm not an also ran. You know, that was one thing I learned a long time ago. You had your top 3 in the horse race and the also rans. I will not be in the also rans. So, you know, basically me, I value our shareholders. I am the largest shareholder. I do have my shareholder ball cap under my CEO hard hat. So I do take our collective ownership into account in a lot of decisions. And like I said, hey, I could have taken $20 million twice last week, but it would have maybe put us a little bit at risk, and I didn't do it. Could we grow faster? Yeah, but it wasn't worth the risk benefit analysis we did. Is there better ways to get money? Is there better ways to grow? For a market that's got 100 million potential, and we're sitting at 75,000 subscribers growing at 1,000 a day in 14 states. Do you think where we'll be in a year or two? 8,000 stores that we brought on our network transacting through independent sales reps. And now we're bringing in-house salespeople region by region, and we're well-funded and can keep growing.
What about digital marketing? Are you doing digital marketing as well?
That's a fantastic question. We have not done digital marketing for mobile broadband subscribers because our 14 states are separated, and you have to geo-fence your ads. It's very expensive, and you miss out on a lot of the really good online advertising when you have to say, for example, hey, do this for Tennessee and Arkansas, but not Mississippi. You know, it's very difficult because you get all that overlap. But now that we'll have all the states, like I said, in a couple of weeks, yes, we've already started the integration. We're ready to hit it right out of the gate. By the way, that's one of my backgrounds. I owned a media company. It was one of the first companies I owned. I didn't go into all that, but no, we have that ready, locked and loaded. It's almost a clairvoyant question there that I probably should have brought up. You know, we've talked about so much, but no, we feel like that's going to be huge for us because 2 things. Number 1, we're in every state. Number 2, we're able to provide service on AT&T. We've talked about this. People hear me say it. The commercials you see on TV about nationwide coverage, that's just simply not true. It's not true at all. Once you're off the major highways and out of the major urban areas, it's AT&T. That's the name of the game. So for us being able to be the Lone Ranger in those AT&T rural areas, you know, Pine Bluff, Arkansas, Broken Arrow, Broken Bow, Oklahoma, all these that are not, they're towns. They're not, you know, middle of nowhere. Those are going to be huge catalysts for us moving forward. So man, I tell you, we're excited. We're excited to keep growing our store, B2B, fintech, keep growing our mobile broadband, B2C, direct to the consumer. And I'm one of those crazy guys. I'm happy, but never content. It's also a little bit of an illness, but our shareholders benefit from that. You know, 3 o'clock in the morning on a Saturday night, you know, I'm either at the gym trying to detox my brain or, you know, working on numbers and strategizing marketing campaigns. I can't help it. I love it, man. I love this. And plus it's exciting and I get a lot of energy and electricity from it.
So look, I love your passion, man. I'm so glad that we actually have now finally connected. You know, let's, what I'd really like to do is in the next, you know, let's say 60 days or so, do a little follow-up interview with you. It won't have to be as long or in depth as this one, but you know, just do a little follow-up and see how things are going and progressing and just kind of take it from there.
No, we can give an update. No, that sounds like a great idea. And that way I won't bore people with my past and trials and tribulations and you know, battle scars. You know what? It's really funny. I did leave my t-shirt that I'm fixing to change into hanging over the chair, which was an amateur hour move. So I'm fixing to change into my American flag t-shirt. Next time I'm going to wear my t-shirt. I'm just letting you know.
That sounds like a good plan to me. All right, listen, I'm going to let you feel as though I missed something. I'm going to wrap this up and, you know, we'll look forward to the next one, but do you think I covered everything pretty well? You think we did all right?
I think, you know, hey, I'd love for folks to jump in and be shareholders with us and start following us. You know, I love having guys on board. And
you guys have an investor on your investor relations portion of your site. You have an email alert service, right? Where people can sign up.
Yes. And that way they can make sure and be notified when we do press releases and updates. And like I said, if you look at my shareholders letter, I mutilated the one they first sent to me because I didn't want it to be boring and it wasn't me. Anything that you see from me is a quote from me. You know, most IR companies, I mean, look, they put the whole quote in. What you see is coming from me. I enjoy communicating with folks, good, bad, and ugly. I'll let you know how we're doing. And I want to be very, very transparent on our growth and the things that we're doing and also what's going on up here and where I see us, both near, mid, and long term.
I love it, man. Love it. I love the transparency. All right, Brian, I'm gonna shut this down, but hold on because there's something I want to talk to you about.
Sure.
All right, hold on one second. Hey, all you stock market junkies. Thanks for tuning in to yet another CEO interview here at Alpha Wolf Trading. Today was CEO Brian Cox from Surgepays Incorporated. I hope you enjoyed today's video, and if you did, do us a favor, give us a like. Why not give us a share? While you're at it, how about giving us a follow? Until next time, stay safe. Alpha Wolf Trading wishes you the very best of success.